This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
This episode is brought to you by Nature's Bounty. Nature's Bounty believes your body is brilliant, naturally designed to thrive, inside and out. For those always looking for new ways to support your health from head to heels, Nature's Bounty has a range of over 400 vitamins and supplements born from 50 years of trust and care. Nature's Bounty. It's in your nature. Visit naturesbounty.com to learn more.
With new, gentler scented Clorox disinfecting wipes, clean finally smells as good as it feels. On everything from lamps to ceiling fans. Even on your kid's toy shark. Oh, ouch. Clorox disinfecting wipes. Now available in crisp lemon. Find it on Amazon. Clorox. Clean feels good.
Hi, I'm here to pick up my son Milo.
There's no Milo here.
Who picked up my son from school?
Streaming only on Peacock.
I'm gonna need the name of everyone that could have a connection.
You don't understand. It was just the 5 of us.
So this was all planned.
What are you gonna do? I will do whatever it takes to get my son back.
I honestly didn't see this coming. These nice people killing each other.
All Her Fault. A new series streaming now only on Peacock.
When cool, creamy ranch meets tangy, bold buffalo, the whole is greater than the sum of its sauce. Say howdy, partner, to new Buffalo Ranch sauce. Only at McDonald's for a limited time.
At participating McDonald's.
Hey, thanks for listening. This is Ross Kenyon. I'm the host of Reversing Climate Change, the podcast you are listening to right at this very moment. Before we get into the bulk of today's show, I'd love to tell you about our sponsors, Absolute Climate and Philip Lee, LLP. I've made great radio with both of them. They should be familiar to you if you listen to this show, but I want to tell you about why you should learn a little bit more. The first sponsor is Absolute Climate. I did a show with their founder, Peter Miner, a few months back, and a lot of people loved that show. I was asking a question of, can registries design their own methodologies for carbon markets without it being a conflict of interest? And Absolute Climate's thesis is no, they shouldn't be in the business of doing that. We actually need to disintegrate functionality within carbon markets even further. They are literally the only independent standards body for carbon removal that exists. Their name is very well chosen. I think they are some of the most aggressively idealistic people within carbon removal. It's come up on Reversing Climate Change so many times about how and why there's tension between commercial teams and science teams within carbon markets. There's some fundamental tension between the rules of running a business, or I should say, the rules of running a profitable business is maybe a better way to put that, and climate impact. And I think Absolute is one of those companies that, at least from my experience of what I know of them over there, I think they're going to be some of the staunchest holdouts, just trying to make sure that there can be a justified true belief that a ton purchased is a ton truly removed. They're betting big on not compromising. It's a bold strategy. I respect the absolute hell out of that. Absolute is very much doing things their own way, and they stand out to me, and I will never mistake them in a lineup. Go check them out. I really am endlessly fascinated by what they're doing. And that's also true of our other sponsor, Philip Lee, LLP. In fact, I told them to pitch me on some weirder legal shows. I really like doing shows about the law. I think the law is such a fascinating part of our shared social life. It structures so much of it. It's badly understood by most people. And just structuring deals within carbon removal is hard. I'm talking grown-up deals here. Like when you're trying to put together an enormous package, complicated structuring, a lot of money changing hands, the stakes are high. You really do need a good lawyer. I'm sorry to tell you that if you are a startup out there in carbon removal, you're going to probably pay a fair amount of money to lawyers. There's just no way around it. Your choice is basically, do you get a bad lawyer or a good lawyer? One really cool thing I can say on Philip Lee LLP's behalf, well, one, Ryan Covington and I did a very fun show about how basically no one except for an elite few really know what bankability and project finance even mean. And he lays it out very clearly. If you'd like to go listen to that show, it's awesome and it's linked in the show notes. And also we ended up talking about Ernest Hemingway of Vermont too. So it keeps with the tradition of reversing climate change. One also really cool thing is that they just won Environmental Finance's VCM Law Firm of the Year. They've won it 3 years in a row, 2023, 2024, and 2025. It's the only award for legal teams operating in the VCM, and they have offices in the US, Europe, and the UK. You should check out Philip Lee LLP. Thank you from the bottom of my heart for listening to this, and thank you to our sponsors. You really make this so that it's something that in a busy life with lots of competing priorities, I'm able to keep coming back and making more reversing climate change. Thanks so much for what you do. And now, here is the show. Hey, thanks for listening to Reversing Climate Change. This is the host, Ross Kenyon. The show comes out mostly weekly, and it covers so much of the deep dives within the cutting edge of climate tech, carbon removal, and so many connections to the humanities that really are important for making sense of a climate changed world. If you love the show, you're listening, it's not your first time here, please open up your podcast app, give this show a great rating and review in iTunes, Apple Podcasts, Spotify. Write a quick review that says that you really like this show. It is so helpful. I cannot stress that enough. There's also an option if you'd like to get rid of the ads that I don't read myself. You can pay $5 a month on Spotify and become a paid subscriber. You also get bonus content that no one else gets access to, and my sincere thanks. Today's a cool show. You'll notice this moving forward is that there's going to be a number of shows coming up, or at least I intend for there to be shows about alternative exits, alternatives to VC outside of the normal model of tech development. If you watch the show Silicon Valley, which by the way, I've been rewatching strangely enough recently, and it's funny to see how many things with more experience, like that doesn't really work that way. That's not how that happens, or that would never happen. That's not how this goes. I think when most people think of startups, and this is true, even in climate, even in deep tech, that there is a passionate, youngish, wunderkind kind of founder. They come up with a prototype, they raise a bunch of money, and the goal is to IPO or to have some major acquisition and to become fabulously wealthy. It's all built around how software has developed, and that is no longer the model for how things are going. Insofar as that was ever the appropriate model for carbon removal and climate tech, it's less so now, specifically in carbon removal. Carbon removal is in a tricky spot right now. There aren't the policy and Department of Energy tailwinds that we were counting on for several years. The winds of change have come to the world. The centers of innovation may be shifting outside of North America, or at the very least up to Canada. While there's still quite a lot happening in the United States, there's a big question of how stable it might be. Fulfilling a major offtake is difficult work. A lot of people think that once you get the offtake, you're able to relax a little bit. It is not so. It's hard work once you get the offtake. You have to fulfill it, and there are milestones you need to keep hitting. And if you don't have those offtakes, it can be quite difficult to generate enough revenue to receive future investment rounds, to demonstrate growth, to demonstrate traction. And I suspect, and I know I'm not alone in suspecting this, that 2026 is going to see a fair number of closures, of mergers, of acquisitions. And I'm interested in doing more shows about this. In fact, I have a couple already scheduled, and from my podcaster's lips to God's ears, I don't know if they'll get recorded. You never really do until they're in the can and published. But I'm trying to do more shows about alternative ways that people have exited their companies or been acqui-hired, or ways of doing things that are outside of the conventional, we raised money from venture capitalists and the goal is to 10, 100x, 1000x, and grow into an enormous company that is very, very valuable. And there's a bunch of other ways of doing things that people have either done quietly or that are coming and haven't been announced yet. It isn't only going to be that software-driven model of success. We're going to see different things happening. Today's show is really great because It is about the Wren and Pacific Biochar deal. On the Wren side, I have Sophie Westover on. She is Wren's head of climate. What is Wren? We have a good laugh because what even is Wren? It's so many things. It's, at least in my understanding, it originated as a B2C platform for selling carbon removal and other types of carbon assets that they deemed worthy of being listed on the platform. But it's also become a lot more than that. It's also a place where you can donate tax deductibly to various types of climate action. And because of the way that their company is structured, they actually have a fair amount of flexibility in how they choose to do business. And that means that they can work quite catalytically. They don't necessarily have to be scrapping for lowest cost per ton and just trying to move units. A lot of it is about how do you maybe pay a little bit more now, so it gives companies more breathing room and allows them to grow. And one cool thing is that Pacific Biochar was one of their suppliers for a long time, and they recently announced that they acquired a majority stake in Pacific Biochar, which is really fascinating. Like, okay, there's like B2C, but also donation, but also some B2B carbon moving mechanism that is Wren acquired a project developer, or at least a majority stake in a project developer. Josiah Hunt, who is the founder and CEO of Pacific Biochar, is on to talk about this deal, of what it was like, about getting to a point where you might even consider selling a majority stake in your company, and that you perceive that to be the right move for the climate, for success. And that's really fascinating, because I think when we enter into the climate business, first of all, if you're here just trying to make gobs of money, you know there's easier ways to do it, right? Like it's a very difficult field to work in. You have to know a lot about science, a lot about policy. Basically, anyone will tell you this is very demanding work. And to the right kind of person, that's great. But it's not necessarily the simplest way to make a huge amount of money. Founding a company, there are so many things that you have to keep in mind. And it's one of those lines of work where, well, maybe there's a lot of lines of work kind of like this, but the decisions you make now, you may not know the full ramifications of until several years later. The term sheet that you choose, if you have that luxury of which investors to take into your company and put on the board, when everything is going well, to glad hand and pat each other on the back and laugh and share a scotch. In my mind, VCs are drinking scotch and celebrating your wonderful future that you're going to create and all become wealthy. And that's fine as long as there is that up and to the right dynamic with your company. But that isn't always the case. And depending on how much control you still have at the company in terms of board seats, in terms of ownership of the company, things could change. People that were saying that you were a brilliant, once in a generation visionary one week might decide that they prefer more competent, experienced leadership the next. Giving up control of one's company is a big decision. Josiah choosing to do this, I think, is really fascinating because it enabled them to get a lot of help with cash flow. It enabled them to experiment with a new model for how to do things. And I'm really curious, are acquisitions led by marketplaces a future for project developers and carbon removal in 2026? Will we see other marketplaces make moves like this? It opens up questions of favoritism and conflict of interest, of independence. It opens up questions of, do marketplaces have core competency in investment decisions? They're typically not built for that. The kinds of people who work in investments or sit on investment committees at VCs or PE firms, they're almost like a different kind of person than marketplaces. And maybe there's some overlap career-wise. Some people are operators one day and investors the next, but they're not the same people typically. So like, is this the right move? Like if we saw other carbon removal marketplaces get involved in the project development business, it would be a big change. And I'm not sure marketplaces necessarily want to be in that business. They like having their independence. They like being isolated from the same risks that cause project developers to seek relationships with marketplaces in an acquisition framework. That's a complicated way of saying if someone is coming to you because their project development company is having a hard time, are you sure that you want to buy that hard time? Are you sure you want to step in there? Is this a sound enough company that we want to be doing that? Those are really fascinating questions. And we definitely do not want to see talent leak out of carbon removal. I think a big fear that people have is that we are going to see an exodus of talent out of carbon removal as times get tough. If the trends continue, the companies that are not able to keep it up in the next bit of time, many of these represent years of experience of founders learning the hard way what works in carbon removal, building relationships, developing that institutional sector-specific knowledge that is tacit, non-transferable, and that's going to evaporate. Is this a way that we could make sure that for the right relationships, the right companies, that they can partner to stay alive and make sure that companies that feel this have this option? And why I wanted to do this show is because I'm not even sure that people are thinking on this level yet. They're not necessarily thinking, is an acqui-hire possible? And a scenario that I might sketch here is I suspect there will be companies that are in a position where their runway is running out. Maybe they raised a couple of years ago and the time has come to raise money and it's not going well. And when it's not going well, the decision companies have to make is, well, we can change our valuation. We can do a flat round where our valuation stays the same as the previous round and do like a little bit of a bridge to the next stage, like steady state. Or maybe you have to raise a down round. And a down round where valuations go down means that the dilution is so much greater than it was previously. And founders and early employees and even early investors run the risk of being diluted quite seriously and losing a proportional stake in the company to a greater extent than they would really want to. It's also possible that investors say that maybe the company doesn't have what it takes to survive into this next era and to wind down. If you are in this position and you want to talk about it, go ahead and send me an email. My email is in the show notes. Let's talk, because I think there's room for creative solutions here. There are deals taking place that preserve the IP of the company, that maybe are able to keep core staff going. It's just really fascinating to see companies trying to make the best of a situation like this. So Wren and Pacific Biochar being able to strike a deal like this, I think is amazing leadership. The deal deserves a lot more attention. And I think if you are at a well-capitalized company and you are able to think creatively about what is best for carbon removal, and not necessarily only your company, not everyone has that luxury. It could be because being a public benefit company or a B Corp gives you some extra flexibility besides fiduciary duty, that you're able to make decisions like this. But if you are in a position to try to make sure that companies are able to stay alive, and not just their IP, but the actual staff are able to stay in carbon removal, you should be looking at deals like this. I think if you put out there that your firm is open to deals like this, you'll probably see some interest. The downside of this is that if you are at a company, the old yarn for this is that companies don't get sold, they get bought. And any company in a position to get bought, it's not necessarily going to be the exit that you get to retire on and buy your yacht off of. In fact, if you've raised venture capital, there are preferred shareholders that have priority over you in case of a liquidity event, and they're going to get paid before you. And if there's any liquidity preference, or even if the amount is just small that you're being sold for, especially in the case of an acqui-hire, you're not getting paid. Or if you do get paid, it'll be a small amount. But it's potentially more likely that this will not be the comically large check moment that you imagine in your head. But is that why we're here? Why do we have that expectation? I think there is something weird about going into climate thinking that the goal here is to become a billionaire. I understand why that might be motivating to certain people. If you can make a lot of money doing something that's very valuable for civilization, that's great. That's a really cool thing. But most of the people I meet are not here because they sniff windfall opportunity. I think a lot of people are here because they're very concerned for the future and they feel like they can help. And so if you relax that expectation that you're going to become fabulously wealthy off of your climate work, and you want to make sure that you're able to keep this company going and keep the staff engaged and working on this, I think you should be looking at what are some deals that make sure your runway doesn't run out, that you're just able to keep going. Thanks to Sophie and Josiah for being on. I really respect what you're able to do here. I think it's so fascinating. I love that Wren is thinking on this level. Kudos to Wren for being so forward-looking and courageous in how you structure deals. Hope you enjoyed the show. Thanks for listening. Here it is.
This episode is brought to you by Tic Tac. Your boss is going off at you for missing a deadline, and you swear the clock just moved backwards. Suddenly, you remember the pack of Tic Tacs on your desk. Now you're riding horseback on the beach, the smell of citrus in the air. And what's this? Your boss is sitting behind you, breathing heavenly fresh mint. Refresh your mouth and mind and share your good vibes with Tic Tac.
As a contractor, I don't pay for materials I don't use. So why would I pay for stuff I don't need in my mobile plan? That's why my Biz Plan from Verizon Business is so perfect. Now I can choose exactly what I want, and I only pay for what I need.
Right now, with my Biz Plan, get our best price, as low as $25 a line. Visit Verizon.com/business to get started today. New lines only. Price per month with 5+ lines. Includes auto pay and paper-free billing and promotional discount. Taxes, fees, economic adjustment charge. Applicable add-ons, prices, and terms apply. Guarantee applies to base monthly rate and stated discounts only. Add-on prices additional. Offers in January 5th, 2026.
This is Jason Momoa, and I'll be your finance professor today. Welcome to Banking Smarter 101 with Chime. Bam! First lesson, sign up for Chime and set up direct deposit. You'll be joining millions of members banking fee-free. Second lesson, get cash back on eligible purchases while building credit and a higher APY on your savings. That's how you bank smarter this season. Fa-la-la-la-la, class dismissed. Join Chime today.
Chime is a financial technology company, not a bank. Banking services and a secure Chime Visa credit card provided by the Bancorp Bank N.A. or Stride Bank N.A. Members FDIC. Optional services and products may have fees or charges. Details at chime.com/fees-info. With a qualifying direct deposit, earn 1.5% cash back on eligible secure Chime Visa credit card purchases. On-time payment history may have a positive impact on your credit score. Results may vary. APY means annual percentage yield. Learn about credit building and more at chime.com.
Josiah and Sophie, thank you for being here.
Thank you, Russ.
Yeah, thanks for having us.
Your announcement caught my eye, and we've been talking about doing a show on this, I don't know how long now. It's one of those shows where you start talking about it months ago, and then finally it arrives, and now I'm here. What do I even want to ask you guys about? I don't even know. Probably best to start with the basics, though. How did a deal like this happen? There is no other marketplace that is an equity partner in a project developer, as far as I know. Correct me if I'm wrong with that. And also just tell the story of how this deal came to be.
Yeah, I can jump in first. Wren has been partnering with Pacific Biochar since 2021, and we really have enjoyed partnering with them over the years. And we see biochar as one of the most effective pathways to achieve carbon dioxide removal. And when Josiah approached Wren with this opportunity, our thinking was this is a way that Wren can achieve impact beyond purchasing carbon credits. Our mission is to reverse the climate crisis, and we are creative and innovative in the ways that we deploy capital, and saw this deal as just yet another way that we could be innovative in the way that we deploy capital to have maximum climate impact. So that was kind of the origins of our thinking. But Josiah, maybe you have more to say on where you guys were coming from and how you approached the deal with Wren.
Yeah. So, for listeners who don't know much about Pacific Biochar, we're a biochar production company. We're a climate change mitigation company, achieving that through biochar production and applications. And we're a California benefit corporation, which is something that we share with Wren, which is a signal that we are, a mission-driven company, because built into the DNA of that is that, not only does the board have to consider benefit to shareholders, but benefit to humanity. And those must be considered on equal par, if not putting benefit to humanity above shareholders even. And we share that in our DNA, and that's really shown itself not to just be some words or ideals that we started with, but in the actions. And so when Pacific Biochar was first, figuring out how to get biochar in the ground, which is basically an equation of the carbon has to be worth more in the ground than it is in the furnace. Because anywhere you have a furnace, you're generally going to be of size that you can also generate some sort of energy value. And so you have the opportunity there to burn it instead. So we have to make it worth more in the ground than it is in a furnace. And how do we do that? And before we did that on ag revenue alone, we survived a meager existence for several years, but struggled to ever really get much scale and survive, with the mission always being to mitigate climate change, but never having access to any financial reward for the carbon services provided. So then, 2020, we registered the first biochar carbon credits for any company in North America. It was a first for us. That was a big deal. I think that's kind of around what I think is an inflection point in the biochar industry for us and many others, when you could finally get financial reward for the climate mitigation services. But then the world's still trying to figure out, like, well, what does this mean? What is a CDR, and how does this all work? A carbon dioxide removal. And we priced it too low. We underestimated the true cost of how to get this all done. And so one of our first deals with Wren, we priced it really low. And then we came back to them. He was like, hey guys, we goofed and we need to raise the prices. And they didn't blink. They said, well, that's what you need. That's what you need to get the job done. We talked about it a bit, and they felt it was justified. They're like, okay, we get it. Yeah, here's your new price. And it was like, I was just kind of like taken aback, like, oh my God, like, you're really here to support us. I felt like it was a team.
Did they give you the price for the credits that already sold?
No, for the next round of credits.
Okay, I was gonna say, Sophie, that's probably too generous.
No, yeah, no, we try not to do that, but for the next round. And then not too long after that, we come back and we say, hey, we're having a problem because we are having trouble accessing financing, and we have a lot of opportunity to grow, and the opportunity to grow is having dissonance with our cash flow. And so we need to bring in cash up front. When you get some sort of financing, we need to get cash ahead in order to grow into, especially because there's a delay between our production and our issuance of credits. And so we said, we'd like you to pay up front for the credits. And they said, yeah, okay, done. Let's work that out. And it was just like, oh my God. And it was like a game changer. And it just felt really nice to have that support and to be able to work with a company that really seemed to be taking to heart that we're all a part of a larger organism, and that they need to do what they can to support us in a way. And they were so very fluid and quick with that. It was surprising and wonderful. And and it came later, it was earlier this year that we came to them and said, hey, we're in a pickle. We're at risk if we take this next prepayment from you. We're kind of in a pickle right now. We might increase our cost of debt, and it's not purely sure we'll ever actually be able to get that paid off. But if we don't take this prepayment, we sure are, in trouble. And here's our finances. Here's what we've been doing to try and raise money, and here's how everything looks. And they're like, oh, this is solvable. That's pretty reasonable. This is like a cash flow problem. It's like working capital kind of stuff. Why don't we take a look at this? And then we took a look at it all, and they said, hey, why don't we join you as equity partner? It wasn't exactly, but I'm taking a big amount of communications and just squeezing them up, and probably, anyways, there was, and it was in that same frame though. It's like, oh, you guys are facing an understandable contextual issue that we are in a position to help solve. So let's work that out. And that was my recollection of kind of how it went. And I'm sure there was a lot of from our side, we were looking internally, what would this be like for them to be an equity partner? And I'm sure they did a lot of internal diligence on the dynamics, because right at the head there, Ross, you brought up a really good point, which is, it is a unique situation. They are kind of a marketplace, although I'm not sure if that's exactly how they would describe it. But it's market. They're just Wren, you know.
It's so creative. I love that about you guys. Like, who else would even do a deal like this? It's really courageous and cool.
Yeah. And so that's kind of how I felt like kind of leading up to it. And so sorry, I had to lay so much groundwork because I felt like all of those earlier things were very much in line with what this most recent transaction was, which was them identifying that if we're going to be doing a really good job supporting our suppliers, you know, who are kind of the front line of putting the carbon in the ground, what does that look like? And this is kind of a result of that. Does that seem appropriate, Sophie? Do you think I characterized that all right?
Yeah, absolutely. And I think you're kind of touching on one of our key priorities is we are willing to work with suppliers in the way that's best for them ultimately. And that's across the board. That's not just with Pacific Biochar. And that means when I'm starting to engage in supplier relationships, I'm trying to understand, what do you need now? What do you need today to succeed in the future? And so is that an offtake? Is that a spot purchase? Is that a pre-purchase? Is that an investment? And I think that having years of relationship building prior to this deal really helped make our decision making a smoother and easier process, because we knew Josiah. We had gone out and visited one of their wineries where they were deploying biochar. We had kind of personal relationships with our suppliers. And that's one of the things that we really try to prioritize at Wren, is breaking down the barriers between buyer and supplier, understanding their priorities, understanding their needs, and having that kind of basis to work off of made our decision a lot easier. And ultimately, yeah, that's our goal at the end of the day, is what do we need to do today to succeed in the future? And in the context of, you know, prepaying for credits, we recently started using Kita Insurance to help us kind of gain some more risk management tools, I suppose, in deploying that capital and being confident in how we deploy that capital. So, you know, prior to the deal with Pacific Biochar, we had actually laid on insurance to the credits that we were pre-purchasing from Pacific Biochar. And yeah, I think that the TLDR is we will work with suppliers in the way that they need to. And maybe that makes us a unique market player, that we're not just looking for the lowest cost, high quality credit out there, but we're really trying to think within a systems change perspective of what do we need to do today to get the system to a place where we're actually going to achieve large-scale climate action.
It definitely reads that way. And if you're listening and you'd like to learn more about carbon removal insurance, there's a great episode, a personal favorite even, with Kita, that I'll put in the show notes if you'd like to go back and listen to. So, Sophie, it sounds like Josiah is a long-time trusted supplier for Wren, you know, facing headwinds here, comes to you and says, the fundamentals of our company are strong, but we have some contextual difficulties, as he said, cash flow problems. And you agreed and said, okay, it seems like it is a temporary thing. It is a contextual thing. We want to make sure you do not collapse, do not go out of business, do not face some sort of panicked acquisition scenario, but stay alive and stay independent in this kind of way. Is that broadly correct?
Yes, that's broadly correct. I think that if you're looking at CDR.FYI, I mean, Pacific Biochar is
I pulled it up while you guys were talking. You're very close to the top of deliveries, Josiah, like among the most successful companies that exist in carbon removal, which is also fascinating. Like, how could a company this successful also like be an extremist in this kind of way too? Like, that's really surprising and scary for the industry as a whole. But sorry, Sophie.
Yeah, no, absolutely. And that's exactly right. Like, you know, Josiah came to us with this pickle that he was in. And if we're looking at CDR supply globally, we're just going to watch one of the largest suppliers go out of business when we are able to step in and help them succeed. So, you know, Wren was in a financial position where we were able to access a loan and able to send those finances over to Pacific Biochar and save the company. And at the end of the day, we just didn't want to see them. We want to see them succeed and continue to scale and continue to be at the top of that leaderboard.
Is Josiah a special one-off case? Are there others that you might look at and feel the same way about? Is this a pattern we should recognize from Wren?
I think that if we can prove that this model works over the next 12 months, then I could see a situation in which Wren does this again. I think from a buyer's perspective, the number of developers who come to us are in similar situations, whether that's they just need operating finance today or they're struggling to get the investment that they need, or whatever the case may be. I mean, I think the long and the short of it is like there's so many great companies out there doing fantastic things, and there's not enough money to support them. And if there's an opportunity where Wren can step in and provide that support, I think that that's a potential down the line. I think it definitely helps when we have a longstanding relationship with the project partner and we kind of know the ins and outs of how the project is operating, who's behind the project, their management structure. That definitely helps. But I think, if we can prove that this works and we can prove that our customers and businesses that we work with are kind of down to accept our kind of theory of change, so to speak, and are willing to kind of support carbon removal through an investment lens as opposed to a pure, carbon credit purchasing or lens, then I think that this could be a scalable model.
So exciting. I love it. Josiah, have you been able to exhale? Like, do you feel like this has been a relief? What's it like for you entering a deal where I imagine, Wren is the majority shareholder now. Is that correct? Yeah. You've relinquished majority control of your company. Like, what's that like being an entrepreneur and going through that?
Well, you always wish that it came with a massive paycheck or some massive, thing, right?
You still have to work, huh? You still have to go back.
I mean, that's not why. That's not why I came into. Like, if a paycheck was why I chose this career choice, that would have been a dumb choice. That would have been. I'm not. Like
that's not it.
And I've been really enjoying having Wren as an investment partner, because one of my biggest concerns with taking on investment partners has been the change of focus. When we had been looking at potential investment partners, we talked with quite a few in 2023, and some in early in 2024, and it was kind of disheartening, to be honest, how many of them were. They would have climate or impact or something like that in their title or somewhat in some stated mission, but when you got down to the brass tacks, when you got down to the the nuts and bolts of diligence and things, mostly was like, hey, how can we increase profit, and then you'd be like, yeah, here's some options to increase profit. All of them reduce impact. Here's how we can reduce impact to increase profit, or something like that. They're like, yeah, let's do that. And so there was like this juxtaposition where we're really a mission-driven company. We're really trying to mitigate climate change, and we're getting there the best we can. And profit is necessary. If I thought we could have done more as a nonprofit, I would have chosen that pathway. But I felt as though a for-profit company was a better vehicle in this kind of environment, in this market space, to achieve impact. But we're still very mission driven to actually achieve climate impact. And I felt that with so many of the investment opportunities, this isn't to say all of them, but with so many of them, there was oftentimes a lack of understanding in the problem that we're solving, because there's money coming from somewhere else, and they don't really understand the whole climate action environmental space. And there were very clear signals that the ultimate guiding light is profit. And they would want us to flip it. They'd want us like, all right, how are you going to achieve somewhere between 10x and 100x in 5 years? And give us, where's our return? Where's our exit? We need a 5-year 10x exit or 100x exit. And that's ultimately a lot of the pitch decks, if you're going to an investment firm, will often be kind of tilted towards that. Basically, the ultimate slide they want to see is how you are going to give them a 5-year exit with 10 to 100x returns, and then everything you do is just how you get there. And that can bring dissonance into a company, and I've seen that happen to other companies in the space where they had focus on technology and focus on a mission, and then a big influx of money comes in, and then there can sometimes be dissonance in the goals of what to do. And sometimes that can be resolved into a successful pathway, but many times not. And so the concern over bringing in investment capital and bringing on new owners into the company that would not be aligned in the mission, and maybe have less experience in the space, would result in an outcome that I didn't feel good about. And I know that's a very privileged thing to say, like, well, I don't feel good about the outcome, so I'm going to try and do something else, or maybe stubborn. I don't know, maybe a little bit of both. But yes, it concerned me a lot. It not just being able to access money, but being able to access money that was not counter to the overarching goal of what we're trying to do. And bringing Wren on, even as a majority stake owner, does not feel at all concerning in that. It has, like you were saying, like you started the question with, is like, do I feel like I can exhale? Yes. Like, it's like, okay, like
right now,
we got some really good partners here, and they don't have as big of pocketbooks as some of the other investors that we had spoken with. And that's its own set of difficulties to overcome. It's not as though Wren has unlimited cash behind this round. So we'll have to go that together. But do I feel as though it brought enough in to get us to the next stages? Yes. And do I feel very comfortable with the new arrangement in the ownership? Yes. Very happy with how it all laid out.
Sophie, how are you able to not put that kind of pressure on Josiah 5 years, 10 to 100x your return? Is it because of the way that you're incorporated? Is it just the ethos of the people who staff Wren? Do you actually want that, and you think that you're just the better way of getting to a very good return for Wren in a more ethical or more complex kind of way?
I think there's a mix. We are a public benefit corporation, so we are bound by our mission, which is to reverse the climate crisis. And I also think it's the ethos of our staff. And as opposed to trying to make the most amount of money off of this, we're trying to make the most amount of impact off of this while still being financially stable and having a profitable company that's able to continue to achieve this impact over time. So as opposed to thinking of, 10x impact, I want to, walk away with millions of dollars in my pocket from this deal. We're thinking about 10x impact and how do we scale the company and bring Pacific Biochar to the top of the CDR, FYI leaderboard. And I think that ethos is very apparent in all of our staff and with everything that we do. Oftentimes, I think, even just in the context of the VCM broadly, there are places where we could nickel and dime our suppliers and try to get the lowest cost per ton and try to, do it as cheap as possible. But is that the best way to achieve long-term impact? I don't think so. I think sometimes it's good to pay the supplier what they're asking for as opposed to trying to get the lowest cost on things. And that's how I purchase credits. We've been willing to buy $35 cook stove credits, which is the highest in the market so far. But we know that by providing that high cost per ton today, we're able to get the company where they need to be in the future and close huge deals with large buyers down the line. I kind of feel like I'm beating a dead horse here, but like at the end of the day, we're not trying to like make a ton of money and like be rolling in cash and paying our staff ridiculous salaries. We're trying to achieve impact, and maybe that's a unique position or like an ideological shift in the way that investment has been done traditionally in any company, and climate companies too. Kind of Josiah was saying that the institutional investors that he was speaking to really wanted that high rate of return, and that's just not our motivation. Like our motivation is to create a world where we're not sizzling up and burning and dying. And like we want to, I know that's dramatic, but like that's actually the problem that we're facing, is like an unlivable future for ourselves and our children and our grandchildren. Like ultimately, I think that's why everybody at Wren works at Wren, is we want to create a livable future. And I think that I might be going on a tangent here, but I think that there's a tension between like capitalism and the desire to make a ton of money and, you know, working as a nonprofit, and like, where's the sweet spot? And that's why I wanted to go into the carbon market originally, is because I think that market-based solutions can be extremely powerful. And when you pair profit with impact or become a triple bottom line company or public benefit corporation, when we tie incentive structures to like reasonable financial returns, I think that's when we see growth in the marketplace generally, and growth in climate solutions broadly speaking. I don't know if I'm answering your question succinctly, but I think at the end of the day, we're not like trying to make the most money. We're trying to have the most impact while being financially stable.
Yeah, no, I'll interject there. And something you said earlier, which I think is a really important one. You were saying that, you know, you're not necessarily looking for 10x returns, you're looking for 10x impact. And then you talked about this kind of tension between the traditional drivers of the markets we work in, traditional drivers of capital, and then also achieving the goal of climate mitigation. There's a tension between these two things sometimes. And yeah, I think that's a really important part to dive into in some of what I saw in difficulties of accepting cash and finding cash, and also why the deal fit so well with Wren. And so I just want to express a lot of sympathy for a lot of the funds that are out there trying to achieve this impact, because, you know, you'll have some beneficial donor who's going to put, you know, $100 million into this fund, and it's going to be a fund that is going to go help invest in companies that are doing carbon removal and climate impact. And the directions of that fund is basically achieve impact and increase the fund, right? And if you're that fund, one of the best ways to increase your impact is also to increase your fund, right? Larger fund equals more ability to invest equals larger impact. So they're often stuck within this model where they're looking for companies that can provide 2x impact and 10x returns, because that helps achieve impact and grows the fund, because they're not all going to succeed. You need those high returns because you're also going to have some failure. And so if you're a fund, oftentimes that's kind of the natural direction that things will go. And it makes sense. It's a rational position to take. But then that also can sometimes be at odds with a lot of the companies in the space. They're like, dude, I'm on the opposite side. You're looking for 2x impact and 10x returns. I'm the flip. I'm aiming for 10x impact and 2x returns. And I think that's a divide I see so commonly with companies in the space, that they're coming at this passionately, and they have a technology and they really want to help solve the problem, and they're aiming for 10x impact. But oftentimes there is a balance between impact and returns. You can't always equally get both. There can be a little bit of sacrifice between one or the other. And so I think that is part of the tension. in the space that can make it difficult, and why I think the investment between us made sense and was a fairly easy fit, because we're both aligned in that same direction. 10x impact, 2x returns. Anyway, so sorry, I just want to dive a little bit deeper on what I think is a pretty important part, and not to like blame it's all the VCs, it's all their fault. Like, they are dealing with they're making rational decisions based on the context of what they have at hand.
Yeah, their LPs are mad at them. They're all rushing to get their deals done by the end of the year. Like,
yep,
it's to understand all is to forgive all. And even if there are structural problems with VC dominating carbon removal or other things, we can still have sympathy for the actors caught within that dynamic. I feel those tensions too. Like, I feel like everyone feels the responsibility of their role weigh upon them. I do like the way that you split this up, Sophie, in your elaboration on it, Josiah, of purely capitalistic organizations on one side of the scale and then pure nonprofit on the other. And maybe Wren is just choosing the split farther towards the nonprofit style, and that unlocks a lot of creativity. A question I had related to that, though, is, okay, Josiah, I know you're a regular listener, so I'm going to do like a peak Ross self-parody kind of thing right here. Okay. This one sentence is so annoying, but I'm going to say it anyways. I don't know if it's from Anna Karenina or War and Peace, but the Tolstoy stand-in in one of those ends up liberating his peasants before the 1861 liberation of the serfs. And it goes terribly. Like, none of them trust him. They all think it's like some sort of scam. Like, why would a landlord do this? And insofar as what happened with Pacific Biochar and Wren is an act of charity or kindness, and you can dispute that framing in a second, but if it errs on the side of kindness, there's a little bit of a sense that there could be a no good deed goes unpunished kind of thing here. I imagine, Sophie, that maybe there's been, is there favoritism towards Pacific Biochar? How do we get in on this? Is this a conflict of interest for you to even take a stake like this? I'm sure maybe there's been some concern about that driven your way. And I'm curious, one, am I onto anything? And if so, how have you dealt with that?
Hey, this is Bill Simmons from the Bill Simmons Podcast, here to tell you that Michelob Ultra, the official beer partner of the NBA, is bringing NBA fans closer than ever this season with chances to win great prizes, including courtside tickets. Enter now at michelobultra.com/courtside. Michelob Ultra Courtside 25 to 26. No purchase necessary. Open to U.S. residents 21 plus. Begins on October 1st, 2025 and ends on June 30th, 2026. Multiple entry periods. See official rules at michelobultra.com/courtside for free entry deadlines, prizes, and details.
Meet the computer you can talk to. With Copilot on Windows, working, creating, and collaborating is as easy as talking. Got writer's block? Share your screen with Copilot Vision to help spark inspiration, and use Copilot Voice to have a conversation and brainstorm ideas. Or maybe you need some tech help. With Copilot Vision, Copilot sees what you see. Let Copilot talk you through step-by-step guidance so you can master new apps, games, and skills faster. Try now at windows.com/Copilot.
Oh, Hilton stay, your beds are soft and cozy. No lumpy couch, no stiff futon, no shower line at crack of dawn. Oh, Hilton stay.
When you want holiday comfort you can count on, it matters where you stay. Enjoy comfortable rooms and friendly service when you stay with Hilton instead. Save up to 25% this season when you book with Hilton. Hilton for the stay. Terms apply.
Yeah, I mean, we thought a lot about like conflict of interest and like what does this mean for Wren and Pacific Biochar, and like how do we avoid conflict of interest? And if Pacific Biochar, for some reason like goes off the rails and is now charging ridiculous amounts for their carbon credits, and I can get the same impact from another supplier or whatever the case may be, like we thought pretty deeply about like how do we kind of separate these things enough that we're not doing anything immoral or unethical, I suppose. And so the way that we kind of thought about that internally is, first, if we're going to continue to buy credits from Pacific Biochar and have those credits insured, like, is our insurer still willing to cover that? And we checked with Kita to make sure that, those bases were covered and they were still fine doing that. Second, I think that we're still being thoughtful in the way that we're purchasing credits from Pacific Biochar and are willing to reevaluate the project if new information arises, if there are other solutions that are providing similar impact, but are much more cost effective. I haven't seen anything that has come across my plate that it's like, oh, wow, this other company's doing this, for half as much as Pacific Biochar is. We haven't kind of crossed that bridge yet. But surely I think that, part of the reason, just being honest, like part of the reason why we were willing to make a deal with Pacific Biochar was because of the relationship that we had with them. And maybe that is like favoritism in some way, for sure. I can't say that it's not. Like if we didn't know Pacific Biochar and they came to us, I don't know that we would have been willing to work with them. But I maybe almost want to frame that in the same way as like trust-based philanthropy is pitched. Like you trust a nonprofit to do good work. You give them the money and say, go do the good work. And that's, a very normal pathway to doing effective philanthropy is non-restrictive, multi-year giving, go do the work. We trust you. But you need to have some sort of relationship with the organization that the philanthropist is funding in order to actually have that trust in place and just go say, yeah, here's the money, go do a good thing. I don't know quite what I'm getting at here, but I think that that's kind of like a similar kind of thought process is, yes, maybe people could argue it's favoritism, but we also have like seen proof of impact from Pacific Biochar over the last 4 years or however long it's been. We've gotten credits delivered. We've seen them on the CDR.FYI leaderboard. We understand Josiah's kind of ideology or theory of change. We believe in what he's doing and, have gone out and visited the project twice, and we have that level of trust. And so, yeah, I think there are, areas where conflict of interest could arise. We're doing what we can to keep things as ethical and separate as possible. We're not trying to play favorites when it comes to purchasing decisions. I'm still having conversations with plenty of biochar companies, seeing if any of them can, knock Pacific Biochar off the leaderboard or off our preference sheet, so to speak. That hasn't happened yet, but I think we're doing what we can to reduce any conflict of interest.
Josiah, I wonder if your peers have approached you and said, how do I make this happen? We've been speaking for a long time, and I suspect, and maybe you can confirm, that you are not the only biochar or carbon removal tech and or project developer that is feeling this right now. I suspect there's a lot of difficult feelings happening that maybe people aren't airing.
Yeah.
And we're probably going to see more of that, I think.
Yeah. I think there's a lot of stress, a lot of distress. I think there is kind of a natural tendency of, no good deed goes unpunished. And, which I think, I'll bring up a great example. Let's say, Acme Corp goes out and decides to purchase some carbon credits. And then some other corp.
Is this from their anvil sales?
Nuco. Okay, we'll have Nuco over here. I'm just thinking of bland names, right? There's Nuco and Acme. Acme goes out and purchases some carbon credits. And then it turns out that those carbon credits were imperfect somehow. Meanwhile, Nuco did nothing. Who's going to get slandered in the news? Right? And I mean, the answer. I don't even have to say it. Like, Nuco is fine. They did nothing to contribute to climate action. They did nothing. And they're going to be fined. And Acme Corp, meanwhile, is going to be punished for no good deed goes unpunished. And I bring that up as an example because I think it's something that we in this entire community are quite guilty of. And I think partly because many of us are distressed. And so sometimes it's like we're like crabs in a barrel. And And so instead of like, hey, how could this be wrong? How could this be bad? Like, how could this be good? And I think one of the ways that it's great is that Wren is getting a much better understanding of what it's like for a supplier, for a boots on the ground supplier. And so through their gaining of understanding of what it's like for boots on the ground suppliers, they have a better understanding of the needs and concerns of all the rest of their fleet of suppliers. So by us working with them in this way, it can benefit every other supplier they're working with, because now they have a better understanding of what it's like. And by having regular communication on this, they can see like, oh, wow, maybe you guys are, maybe we should ask questions that we hadn't been asking before, because I think a lot of companies are struggling, but it's not a place of strength to announce your struggles, right? If you want to get the next round of funding, if you want to get those next credits, if you want to get the next partnership or whatever, you best appear strong and sturdy, and the water is calm. Come on in. It's great. So I think the incentive is to understate the difficulties and to overstate the successes. That's just what we're all incentivized to do. And I think because of that, there's a lot more distress and difficulty than most people tend to be aware of. And I think that it inserts a fragility to the system that if we were more aware of, we could perhaps better assess and better treat. So left a few things open-ended there, but I think putting back on the question of like, what are the positives of this? And I think there's some significant positives. And then also kind of what you were mentioning. I do think there's quite a few other companies that are distressed right now and could use some help. There's a significant gap in ability to capture finance, and there's a huge difficulty because generally with CDR, your costs are up front and your revenue comes sometime later. And the gap, even when it's consistent, that gap between cost and revenue is painful. But then you insert volatility because this whole thing is evolving quickly, and with evolution comes the volatility. That gap moves. And typically it's extending, and sometimes the goalposts will move after you even kick the ball. And so this can further distress. And so that I think is a great source of fragility within the entire industry. And there's not a lot of great mechanisms to help support companies transition, working their way through that and scaling up. So yes, I would definitely say that we're not alone in wanting to partner with companies like Wren that can help us with financial assistance in difficult situations. And we feel very privileged that we were able to, secure that. Don't know where they should all, I don't know what to say. I wish I had answers for them all. Like, I think like Wren, like Sophie was saying, they only have so much capital. And I'm sure after this podcast, there might be a few more that hit them up. I don't know, like where is that big pile of money? I don't know, to help us all out. I don't have the answer to that, but I do think it is probably a bigger problem than most people are comfortable vocalizing.
Just pulling on the thread, Josiah, about increasing the level of transparency between Wren and Pacific Biochar, and being able to get a peek behind the curtains has allowed me to learn more about what it means to succeed for a company and what the financial challenges that are oftentimes going on behind the scenes. And I think it's true when I speak to companies, they are trying to present themselves in the best light. They want our money. They're trying to say, yes, we're going to be around in 5 years to deliver those credits, or we're going to be able to scale impact X, Y, and Z. And so I think a lot of times these kind of really hopeful stories are being told to buyers about the company. And I do think it's okay to say, a pre-purchase of $100,000 is extremely important for our company and is going to be what allows us to survive in the future. And speaking from experience talking with other buyers in the Air Miners Buyers Club, when we're talking to suppliers right now, that's oftentimes a question that we ask to the companies: how impactful would a $500 or a $50,000 purchase be for your company? And I think the sentiment within the group that I've been working with is we want to see just how impactful on a nitty-gritty basis that small purchase is. And so the deal with Pacific Biochar has just like allowed me to understand a little bit more the nuances that go on within a developer, the decision making, the a $10 increase on a credit price versus a $20 increase on a credit price, how impactful that is for like the bottom line overall. And so now when I'm diligencing projects, it's almost more important for me to get an understanding of their finances, so we understand how impactful we're being, and just better manage our risks overall, I think, generally when it comes to credit purchases. So the TLDR there is just like the deal with Pacific Biochar has taught me a lot about the challenges of being a developer and how Wren can best support other developers in the space, best support the developers that we're currently working with, better structure contracts and agreements to support developers over the long term, as opposed to maybe doing like a couple of spot purchases or a couple of small pre-purchases. Maybe we talk about a year-long contract or a 2-year-long contract, so they're able to go out and use that contract to raise funds down the line. Yeah.
Do you think this is a model that other marketplaces, even if we don't admit that Wren is a straightforward marketplace, could Carbon Future do this? Could Supercritical do this? Could any of the marketplaces pick up this model and run with it? Should they do that? How are you feeling about the replicability of this?
I think it depends on the priorities of the marketplace. Like, I think that there are some marketplaces or players in the space who are more focused on like systems change and impact. Like, I think of Milky Wire as being one of those organizations. They have their climate transformation fund, and I think are looking at things through a beyond value chain mitigation lens, as opposed to a pure, let's just help this company offset for the lowest price lens. So I think for the organizations that really prioritize systems change and are willing to be more flexible and catalytic in the way that they distribute funds, then this could be a really smart approach for them. I've also been approached for investment deals that allow you to have rights of first refusals on credits or some other kind of creative mechanism to secure credit supply down the line. And so perhaps that's another model that could be picked up. I think that maybe that model is more standard. Generally speaking, just from conversations that I've had, I can't say that for certain. But yeah, it depends on the priorities. But I think for those who are really serious about systems change, then this is absolutely a thing that could be picked up and replicated.
I'm curious if we're going to see more of it, because I'm certainly not the first and won't be the last to predict that we will see a lot of mergers and acquisitions and shutterings next year. I hope there's not that many, not more than is necessary for an industry of this type of maturity. Some of them are natural. It's going to be okay when some companies close or fold or however it happens. That's part of natural growth. It's okay. But the ones that are macroeconomic, that don't seem to be in the control of the company as much, you want to prevent them. I think we're probably going to see more of them. Is there going to be other project developers that buy similar adjacent technologies that can work together very nicely? I think we're starting to see more of that in direct air capture. I don't know. Are marketplaces going to start buying up biochar companies? Are there other deals that might take place that I haven't even envisioned yet? Do you guys have any predictions on what it might be like as a project developer? I'm sure you probably said no to a couple deals, Josiah. Did you shop this around, by the way? Was it just Wren?
Yeah, I mean, it wasn't our only option.
Okay. Yeah.
It was our favorite option, but not our only option.
Josiah and Sophie, thanks for being here. I really like the structure of this deal. I hope we see more things like it. I'm really intrigued by it. Sophie, thanks for the leadership of you and your team. And Josiah, big respect for what Pacific Biochar has built over the years. Thanks for being on the show.
Thank you, Ross.
Thank you.
Men need a store that has the right thing for their thing, like a Kenneth Cole suit made with Showflex fabric to keep them cool at their cousin-in-law's third wedding in the middle of July. Whatever the thing, Men's Warehouse has the clothes for it. Love the way you look? Men's Warehouse.